Hey, I'm Paul Hamilton. I'm an economics professor at Asbury University. I'm also a certified financial planner. I've recently subscribed to a new tool. It's called RightCapital. It's a financial planning tool. You will need advisor access to it, so shoot me an email. I'll be glad to hook you up. In this video, I just want to show you a brief, big overview of the functionality. A lot of this stuff the do-it-yourselfer can do themselves. So I'll give a lot more details at my website. The sign up is free. You're welcome to use it. If you want other services, then we can look into that. But I'm hoping people will jump in and learn a lot themselves and maybe do everything themselves in terms of maybe making some really good financial decisions. So there's 10 categories, which right off the bat can sound pretty overwhelming. But I wanted to go ahead and at least give a brief look at each area that you would look at as potentially so for your financial life. The best advice I probably ever heard on financial planning is go sell everything you have and give the money to the poor. Well, that's probably a little too radical for most people. So we're not going to carry out that plan here. I suppose you could, but we'll look at these, and I think you'll find it really useful how to, if nothing else, know where you're standing and where you may be going in the future. So we have to start, unfortunately, for a lot of people, the word budget has a negative connotation. If you like the terminology spending plan better, terrific. But it really is that. We're going to look at one of the first things I would highly recommend is using the built-in budget form here. You set your income and then your expenses. Even if it's rough, it gives you some sense of are you close to living within your means. The second area is your net worth, and RightCapital, like some other apps that are out there like Mint, allows you to track on a real-time, daily basis what's happening to all of your accounts as well as your aggregated net worth. So there's some nice graphs you can look at historically. I highly recommend this if you're looking at any kind of debt issues, that you can see how that's being hopefully paid down over time. Savings. Now this particular view here, the cash flows can be a little overwhelming for people that don't like looking at spreadsheets, which is most people. But on the left-hand pane is essentially where your money's coming from, usually income, maybe some other things in retirement. On the right-hand side is where the money's going, expenses, taxes, and plan saving. And then you have additional money, these net flows, which you could think the way it's treated within the software is if it's positive, then that's added to your savings, even though it wasn't planned. If it's a negative, then it's subtraction from savings. You could also use it as, well, you could bump up your spending if you knew you had $19,000 that you don't have allocated next year. It may also be used as a buffer. Maybe your income won't be $103,000 as it looks like it is intended to be. So they give a breakdown then of each of these areas. I suggest looking at each of these, your income, your expenses, just to make sure that they make sense. You haven't left out a major item. So the first big question for most people, at least should be, am I living within my means? Which can be a little bit of a tricky question in itself, what exactly that means. The second question is, will I have enough money to see me through my lifetime? And that can be even a trickier question given we don't have any idea really, or not a perfect idea of how long that will be. So the way RightCapital looks at this is through a definition of success that says just that. Setting an age, 90 is fairly typical. You could take it higher if you want to be more conservative to 95 or 100. But success is defined as on the day that you die, you have at least $1 to your name. Now, I will say again, because a lot of times it's hard to get 100% success if you're middle income or even upper income. And the good news, though, is it's not like a cliff. It's not like it's the end and you're homeless and you have nothing. That's not failure in this model. It just means you don't have any financial assets left. You've gone through your retirement spending or retirement accounts, through maybe some other assets, financial assets you have. But almost certainly you would have Social Security still. You might have some other things, a pension or an annuity. Perhaps you still have your home at that stage where you could access the wealth in that. So failure does not really mean true failure for most people. This is kind of really the fun part of this plan, is you can go through and change the settings, and it's all built in, so you're not doing any programming here, so to speak. You're just doing sliders, changing some numbers. So here, originally, I was at a 79% rate. The number doesn't change a whole lot. It goes up to 85%, but I said I'll work a few more years. If I just left it at that, it probably would have gone into 90-something%. I also said I wanted to spend more in retirement, and I think I changed, the allocation to conservative. So again, if you could change one at a time or a set to maybe fit other scenarios that you would choose or that would happen in the future. So RightCapital has a number of ways of illustrating the future. So here is the blue line is the most likely future net values, and then the shaded blue regions are the distribution, various ranges. So here, almost all of the outcomes are they stay positive through age 90. But then I go back and I change some stuff. Perhaps I really want to spend a lot in retirement relative to my current goal of $2,400. If I more than double that to $5,000, and I think I also change Social Security strategy, then I'm going to run out of money. And the bad news is, too, then my Social Security would be a smaller amount, too, even in the failure state. So you can do stuff like this. The last thing here in this section is looking at various scenarios. What if the stock market goes south? What if it's strong? And you can compare the robustness of your plan across potential future states of the economy. One last thing is the stress tests. So looking at 6 different variables. What if the stock market crashes? What if you live longer than 90? So I do that here. What if you live, instead of 5 years longer, what if you live 10 years longer? Well, that longevity risk, which it's not all bad, you've got 5 more years of life, but you also have to have financial assets, and there's somewhat of a risk that between 90 and 95 you'll run out of assets, more so than before that. So wealth management is a huge area. There's a lot of people that would gladly manage your money for you. RightCapital gives you a good overview of what's happening with your money. So where do you stand relative to some various target allocations? It doesn't really do the optimization for you, other than letting you look at different scenarios. Let me just go through this quickly. There's a lot of this I would downplay. To me, there's certainly no reason to try to pinpoint these to be exactly balanced out across, say, industries. And similarly, the equity sector and style, to some way that reflects your personal preferences, not anything necessarily wrong or non-optimal with your plan. It does give you, again, some good advice, though, if it notices that you have a high concentration in one asset, maybe your company stock, then you might at least start thinking about diversifying in some way from a highly concentrated position. And finally, where is your money at in terms of tax-deferred account, mutual funds or taxable accounts, and maybe some tax-free accounts? My suggestion for this, again, I have a lot more information at usaeconomics.com, is to at least look at an advisor or maybe a robo-advisor that will manage your money for you. Not necessarily because one reason I really like places like Betterment or Wealthfront is that because it's automated, there's not someone trying to make, beat the market, but they're really using the best economics, I'll say, as an economist, to model what an optimal portfolio will look like for you. So this current software doesn't really have that full capability. It does give you a pretty good overview of where you stand and how you might benefit from shifting things around. Social Security is a big area, even for middle-income people and middle-aged people or young people. So one thing I would suggest right away, early on in your planning, is if you don't have a Social Security statement, and if you're young, you probably don't get one anymore in the mail. But go to the Social Security Administration site. It takes 5 to 10 minutes to go through some questions to verify your identity, and then they tell you not only your retirement benefits, which is really what this is about in RightCapital, but also your disability benefits, your and survivor benefits for your family. And that helps in making these other decisions about buying, say, private insurance for disability or life insurance. One thing I mentioned on the last slide is I think that, again, this is a good start to start thinking about Social Security. A couple things. One is it works well if you're single or married, but if you have other life events, if you're divorced, if you're widowed and not getting benefits yet, you would have to, in some way, use some other platform to analyze that. And of course, on my site at US Economics, I give some resources for that, as well as some of my own models that I've developed. How do we mitigate risk? I'm a big believer in simplicity, but as well as planning. There's the number typically thrown around is 6 months of money in the bank to cover living expenses. So a couple things here. One is, well, if you truly become unemployed or for whatever reason are not working as intended, that you there may be other resources you can draw upon that that may be fairly liquid, like taxable accounts, say a mutual fund or something. Also, it's how do you adapt to, if you lose your $100,000 job, you probably shouldn't live the next few months quite the same, although you still have the same mortgage, you still have a lot of the same expenses. So it's a good idea at least to have a target and to be working towards building up that security or emergency fund. Life insurance, there's a number of rules of thumb, having 5 times your annual income or 10 times. I think those are useful, but simplistic at the same time. This chart is really a beneficial beyond those simple rules, and then you can look at your current coverage, and then you can bump it up. Say, I guess you could bump it down too, and then see how your survivor's net worth would be projected over time. So, finally, disability. I think most people don't deal with disability, although there's certainly enough stories out there that can motivate having some good coverage. So here again, you can change that to go ahead and budget for it, essentially, if you want that security of having disability. Social Security covers some, basically complete disability. So if you're a professor and can't do any job anymore, disability will cover. But if I can still be a Walmart greeter, then essentially I wouldn't qualify for Social Security disability, and I make a lower pay. So, all right, so we change those. There's a number of goals you can set up. So one of them is typically paying for college, maybe for yourself, but typically for your children. Here I set up 4 years of Asbury, coming up in just a couple years. So they're only saving $3,000 per year for a few years, and then through college, that's only going to cover 13%. If grandma can contribute $25,000 today, that'll get us up to a third of the coverage. So this is what I had put in here. The $165,000 is sticker price. Most people don't pay anywhere close to sticker price at Asbury. So the other two-thirds would have to be covered through financial aid, scholarships, work-study loans, etc. Taxes, this doesn't do your taxes for you, although it kind of looks like it in some ways. In terms of the analysis, you get some really interesting graphs of what your projected taxes are. So that may just be of interest that you're paying about 25% of your income in various taxes. And it doesn't include all of them. It doesn't include sales tax or property tax, but the main income taxes or payroll taxes. One way you could use this too is when you're thinking about tax deferral. So this family had a high tax bracket in their working years, a lower tax bracket in retirement with less income. So to defer taxes to retirement through, say, a 401k, looks like a good idea. RightCapital gives a lot of information on the breakdown of taxes. You can dig in as much as you like. One thing that they do exceptionally well is they have built in these tax forms. As I say, these are estimates, so do not use them to actually submit your taxes April 15th. But you can look through a 1040. It's actually for 2016, so that's not even in April. You'll be submitting 2015 taxes. But you can look through that, see what your actual taxable income is. Are you itemizing or taking a standard deduction? If you're thinking about taking an end of year or making an end of year charitable contribution, how close are you to being in the itemization range rather than taking the standard deduction? All right. So there's a lot of stuff you can do with taxes. Estate planning, a lot of times financial planners, there are some elements, especially if you're a high net worth, on how you're going to pass it along and not pay the so-called death tax. But for most people, the bigger questions are having a will in place, having their beneficiary designations in place, including potentially charitable bequests. And then there's some other ones that are out there. On RightCapital, these are really just check boxes. There's not any details about what they mean or how to carry through on this. On my website, usa-economics.com, I give a lot more details on how you can do. Some of these are just forms you can download for free from various organizations. If you want to set up a relatively simple will, I have a tutorial there on some inexpensive software. And of course, if you're really concerned and you have the means, then you can see an estate lawyer and they can certainly do these to perfection. This last slide here is really emphasizing that I think there's three challenges to financial planning. One is it's like a lot of things. There's the beginning. Taking that first step is hard. There's the middle, where you actually have to do the entering data analysis, and then finally, which a lot of times is the hardest step, is carrying through with the things that need to be done. So you actually got to go and see the estate lawyer to have a will, or you need to set up an IRA or whatever it may be. So a lot of people will use a financial advisor somewhat for the advice, but maybe more so even for the coaching and accountability. So a couple things here, or a few things, I'd say, making a list helps, but being realistic and taking reasonable intermediate steps is a great idea, rather than generating the 30 things you need to do to get everything done. So first, for starters, shoot me an email. I'll hook you up with an account at RightCapital. It's just it's a software planning tool. It's not a broker. It's not even a financial planner per se. It's a technology tool. much like, again, Mint or Personal Capital or some of these other financial apps that are out there. Secondly, yeah, you have to do some work. So you need to collect your investment statements, your Social Security statement, plan a time, maybe an hour, an evening this week. Collect what you can, even if you can't get, there's always one or two that are somehow lost, or you got to, get online to track them down. Finally, financial planning. A lot of people don't like to plan, but I think it's beneficial to everyone. Part of it is about financial prosperity, but to borrow from Dave Ramsey, I think it's really best described as financial peace. That when you know where you're at, when you have a plan, even though things are going to be different than what the current projections are, having some sense of that you're working towards goals, I think that is what everyone really needs to try to set out to do. So part of it, yeah, is stop and smell the flowers, or give your wife flowers, even better. And not 2 weeks from now, tomorrow. Okay, so on the way home from work or school or wherever, take care of the flowers, or some of these other simple things to get the ball rolling. Hope you've enjoyed this quick overview. I have a much more detailed description of RightCapital at my website that goes through these at a more pedantic pace, so you can really understand how to use the software. I also have, again, other resources there, some links to a lot of free stuff, as well as some stuff, some models that I've developed myself as an economist and a CFP that I think are a useful supplement to things like RightCapital. All the best as you pursue financial prosperity and peace, and I hope to hear from you soon.